Good morning, everybody. How you guys doing? So taking a look at NASDAQ. Man, these are dirty. I need to clean these. So we got S&P at the highs between ES and NASDAQ right now. Just ran a London high on all three of them. I'd like to see a drop into discount. That's what the CE level is here. Current dealing range on the 15 and the hourly 0.2. At least this unfilled portion of the larger imbalance from 4 p.m. yesterday. Then we have more imbalances as we move lower. Already a pretty decent week, so I don't need to force any trade setups. We did have 8:30 news. So we should get at least one quality setup between 9:30 and 10 o'clock. I'll watch for the SMT at 9:30 as well. And then DXY, let's take a look. Market maker buy model here. We didn't really have any. I guess we dropped into discount there. Yeah, dropped into discount. Buy side from yesterday looks pretty obvious, at least on the 15-minute chart. I'm watching the 15-minute order block on NASDAQ as well. Right in here. This larger up closing candle. And then on ES, it's a little bit more weak. I haven't even touched the discount end yet. So we'll stay patient. There was a nice entry actually right before 9:30. But time-wise, a little bit more difficult. We haven't taken out the 850 low. If we had dropped and taken out that low and then formed the sibi, would have been a nice short into 9:30. But I took us just a demo short on this one. Entered it short off the order block tap, and then took profit at the low here, but wasn't within the model. Anyways, we got the breaker here. I'm going to watch change state of delivery. So if I'm in order block, I mean, kind of looks like what we're getting. Basically the same exact thing we got yesterday, right? Buy side up here. Only thing is we did not drop into discount. This dotted blue line is a discount line from this 15-minute dealing range. If you want to take the larger one, it's going to be this imbalance is the IRL. You can pull it from the wicks there. In terms of daily structure, 4 hour, I mean, it looks bullish to me. You still got this original consolidation that would make sense as a buy side draw. I guess we do also have a mitigation block in here, so we don't need to drop into discount. So we got the breaker here, reversion gap over there, and I'm going to mark this out. Could drop into discount. Watch to see. Now see your 20-point partials. Got 40 points up to that swing high. It literally looks like the same exact setup from yesterday. Five-minute candle also closed above the 8:55 and 9 o'clock order block. Yes, it's a little bit weaker. I'd like it to drop into this gap and see how we react. And then form probably either a stop run on the low risk buy or a stop run on the first stage of accumulation. We can use that to ride it up either into this high or it's actually mark up. Still have this premium imbalance. There we go. We did take out sell side yesterday. So sell side of premium On the hourly wouldn't be a bad rotation. We got this bicep up here too. Now, normally when you look for SMT, you're going to be looking between 5 o'clock and 9:30 Eastern Standard Time. So compare your highs and lows between 5 o'clock and 9:30. In this case, we have 8:30 news, so you can shift it back. But we have this higher time frame buy side failing to be swept on NASDAQ. Holding the CIST level, candle buys closing bullishly there. Now, if it leaves without us, it's fine. We should get another fair value gap entry. Order block here. If we print this, this would be a nice, probably scalp. I'm going to screenshot this quickly. Yesterday's price action was just beautiful. Perfect. Right after it logged off, we dipped right into discount at 11 o'clock and then ran all the way up for the 8:30 buy side, which I didn't think we were going to get that, but ran all the way. Quick 40, nice. From the CISD. They're in premium, so you could look for a retracement. But we have the order block plus fair value gap here. And ES should be popping up. There we go. So now we have this as your breaker. These last two up closing candles. Low, high, lower, low. Order block in here too. So there's the gap. Let's have this inversion too. Should hold price. Watching to see how we react with this order block with the fair value gap. Preferably, we don't actually take out this low, this 937 low. If we want to use this as a bullish entry, it's still outside of the preferred time window. So we got to be patient, at least for me. Don't have any efficiencies on any time frame above this range. So really above here could get speed. You also have to probably mark out 50% of this larger wick on the 15 on the 5. So make sure you're aware of that. 17,788. So dropping below the order block at the fair value gap. Do we have 10 a.m. news today? I was not aware of that. Oh, we do. Okay. So same thing, same exact profile. Watch the SMT up here. Yes, we have the fair value gap now within the breaker plus the order block. Should be pretty strong. If we drop below this range. So still got to wait for this 15-minute candle to print, but SMT present at the highs right now. I'll watch this 5-minute candle too. Looking for shorts? No, not yet. I'd want to see it close really below probably 50% of this bisi. And for the 15-minute candle to close with the SMT at the highs. We just wicked into this fair value up here. Let's take a look at DXY. High resistance liquidity run up so far. So if we continue to climb, which we should, right, we have that bullish bias on DXY, then you can look for shorts on the indices, but still got to be patient here. We have this for value up. Holding the 5-minute change of state is well done here. Closing through this looks good. Like I said, we don't have tons of inefficiencies up here besides the 15-minute wick CE. So as we climb up, you could see speed all the way basically to the buy side. But with DXY still kind of staying up near its highs, I'm not liking it too much. So DXY is popping up and the indices are also popping up. For an 8:30 news day, the profile is a little wonky, I think. Like this should have been a little bit more delayed. Different reasons I consider the CISD. Occasionally it is a breaker, like this one is a breaker. Other times it's going to be something like this. Like if you were bearish, this in here is a change of state of delivery. It's your last up closing candle, which we could revert back to as an order block. Sometimes I just mark it out because it's easier, to be honest, than marking out the full breaker box. Got in a little too early and closed my position for a little profit. Nice. Yeah, if you're able to get in, this is probably the best entry with the breaker down here. About this obvious swing high. Yeah, the break on the fair value gap on ES is pretty strong. You still want it to reach at least above, I would say even above here. Complete the market maker buy model. These two last down closing candles filling the fair value gap is a high probability order block in here. You can also look at that as a propulsion block as we close above. If we reach above this aggressively, this high, this entire down closing range is extremely high probability, or it's a high quality order block. So meaning as we close above it and basically retap it, it's going to be used aggressively. It's a propulsion block with a breaker. And a lot of times you get your second stage of distribution off of the fair value gap that's formed, or off the order block that's formed from the fair value gap run. So it's 950 right now. Don't have clear SMT between the lows. I still am favoring a bullish bias just for the short term. Nasdaq's been pretty bullish as well. Watch the speed above here. I'm going to mark out the 5-minute wick consequent encroachment level. It's at 17,788. So right around here, but starting to get some speed up. Remember, on E30 news days, you can get entries before the macro time. We're looking between 9:30 and 10 o'clock. But look how quick and aggressive we're running up here, right? This isn't random. There's no fair value gaps on the left side. There's your speed coming in right when we wanted to. Now this premium imbalance up here on the hourly chart, I guess you could look as your draw if we want to see continuation from yesterday's price action. So we're stopping right around. Now, since I marked it out on the 5-minute, it's not going to be super precise. The 15-minute is going to have a different wick CE. Same thing with the 5 and the 4. So just right around 17,778. Now, you don't need to see another fair value gap retracement. You'd actually like to see one breakaway gap form as a measuring gap. So we'll watch to see how this is used. But if it comes down and fills it, you can assume it's going to be like an IL Fed, like just a quick run into it and then takes buy side. I guess it also depends on how far ES is. I can still see this completely filled. Now this order block is the one I was talking about. Remove some of this stuff. Fair value gap. So you have an order block here and then an order block here. This one is high probability. So we're watching the bisi fill. Obviously, you don't need the entire range. If you went long in this fair value gap here, already 55 points from the entry to first partial. It's your whole week's worth. You can tell why also these AM profiles are important. This looks very familiar to yesterday's price action, just a little bit more sped up, right? Go back to yesterday's and we look at the same exact price action model. Here we had some delay as it basically had an internal range stop sweep with the breaker. So the low risk buy had the stop sweep, and then we didn't have a stop punt with the first stage of accumulation or the second stage, right? And we ran up into the target as we were reaching for at 10:30. And then today, now with 8:30 news days, it's also important to know that sometimes by around 10:20, maybe it's really between 10:10 and 10:20, so like 10:15-ish, you can get your trend ending around 10:15. So we could just get an entry here, pops to the buy side. Now, if we run this buy side and tap into this with the 10 a.m. news, I would say that's probably all you'd be looking for the day. Especially when it gives you such a good range and a good market maker buy model right off the rip. I think it's the Omega setup, is it right? We have a tiny inversion gap over here. But this, I guess, would be your ATM model, right? Kind of a late entry, but there's still plenty of room to run. I wouldn't like the fact that we're already in premium. This isn't really a preferred entry. So if you were just using a strict ATM model, I guess you could enter here, but we're pretty far into premium now where we don't have to continue up. But I mean, if you want to take your fib measurements, your targets, 2 to 2.5 is all the way up here. So silver bullet zone lining up perfectly. Still take 20 off, I guess, from this fair value gap. Right into there. Watch the 10 a.m. news. I assume it was complete the market maker buy model. Right about to get 20 from there. RTH gap closed. I'm not too worried with that. Remember, RTH gaps and new week opening gaps are all IRLs. So if you run out of something like a London high, you want to look for an IRL and discount, you can use the new week opening gap. 5 minute getting such clear entries. Yeah, I noticed a lot of times there's like two different, really three, I guess, 5 minute. If you line it up with the ATM model, you have your change in state of delivery, 5 minute order block tap. You have a regular order block tap, and then you have a 5 minute fair value gap. And you kind of categorize it into those three. It's really easy to find high quality entries. Already got 20 points from the fair value gap here, the 953. So that's your minimums hit. Now news just accelerates price action. So if you're uncomfortable with the news, obviously just keep watching them. The days that we have 10 a.m. news and it's just 10 a.m. news are a little bit more difficult. You kind of have to shift the kill zone back to start at 8:30 when you have 10 o'clock news. But in here, right, like it wouldn't make a whole lot of sense for the 10 a.m. news to just dip down. I would assume that the news is going to be used as a expansion driver. You want to see consolidation, like we're seeing beforehand. And then it expands up into the target. So right around 17,838.5 is the fib target. Actually, we haven't done this in a while. So maybe by 10:05, we get this high taken. Where's D-Man? Now, news still matters. But it's not something you should be scared of. Like technically every other news driver besides CPI, FOMC, and NFP are quote unquote tradable. Like you can actually get in and use it as a driver for volatility. Like in here, we have a market maker buy model. We just had a deep retracement on the second stage of distribution, which is not expected, but stop run there and then goes up to London high. Not an easy trade, but you can do the same thing with 930, right? There's people who just trade the 930 volatility, and those are all volatility entry points. Now the news is going to be, those are more difficult than just using the volatility to manipulate and then finding an entry after, which is what we do normally. But it's not something that news should be your friend because it creates high probability profiles and easy low resistance liquidity runs. Days that don't have news is sometimes easy because you start right at 9:30, obviously. Other days it's just not the best. We do have this part of the bisi left unfilled. Yeah, 8:30 news with 10 a.m. news is definitely more readable than strict 10 a.m. news. I never really liked, like when I would trade the macro time, I never really liked 10 a.m. news. My suggestion would be when you're studying days that just have 10 a.m. news, look between the 950 macro, if it's an obvious one, and that 950 macro could have a deep retracement. That's why it's a little bit more difficult sometimes to read the 10 a.m. news. So look for a deep retracement during the 950 macro, or hunt setups post 1030. Between 10 o'clock and 1030, a lot of times it just chops around when we have just 10 a.m. news. So it's best to just wait out. When we have 8:30 news, you can see expansion all the way up through there. But got news here in 10 seconds. We've passed constant encroachment of the wick. We're tapping into this inefficiency now. What we could see is just a stop run maybe, and then it runs for the buy side. Gap there. Remember, the 10 a.m. news are always going to be less than 8:30 news. So don't expect a whole lot of volatility when we have both of them, but still just, accommodate for either a larger stop or waiting for the news to come in. Candle buys closing bullishly on this order block. Another high quality order block filling a gap. Right, so all of your order blocks that are high probability are either going to be a breaker, filling a gap. I guess mitigation's up there too. Mitigations and breakers you should consider over everything. Extremely strong PD arrays in the matrix. But breakers and mitigation blocks, then you have order blocks that create fair value gaps and order blocks that fill fair value gaps. So in this case, the reason this is high probability is because you filled this gap and tap into this one. So as price then reaches down into this, you can see we closed above it, wick down, flew off. And it also lines up with the fact there's no inefficiencies over here. Covered 0.5 of my 2.5 to go. Nice. Don't rush it, but that's good work right there. Out of here. Yeah, we'll see you on Monday or Tuesday, Lord willing. Have a good weekend. Solid executions as always. Got 53 people in here. If you're new, welcome. If you got any questions, feel free to shoot me a DM, or you can probably put it in the trading hall chat or general chat. And if you want, I guess, a easy study method for learning the concepts, there's a new Q&A post. That'll help you a lot in finding draw and ATM model, things like that. Why do you use the buys for unfilled portions of fair value gaps? Okay, that's a good question. So when we have a gap, I'm just trying to find a good example. Here's one. Wicks are inefficient. Okay, so if we have a fair value gap that price wants to trade into, either on a higher time frame or a smaller time frame, either one, all of these wicks going back and forth. Now, when you have a lot of wicks, you can basically count that as it trading through it, but it's still technically unfilled, right? Because a sibi in this case is inefficient, plus the wicks are inefficient. So this whole portion up until here has no actual candle buys within it. So you wait until price either fills it completely, so now you have complete buying through the fair value gap range and complete selling now with the multiple opportunities. Then you see the dip at 928. So you can use this for higher time frame targeting as well, even on lower time frames for finding refined entries. So if you go to the 50-minute chart, so something like this fair value gap in discount, you technically would pull it from here, right? You're not going to ignore it, but this is when fair value gaps can be quote unquote reclaimed. When you have multiple entries given from the same fair value gap, it's because portions like this will be left unfilled with just the wicks. It'll come down, tap it, maybe sweep the stops, and then fly back up to whatever direction. But something like this came all the way down with selling, filled it all again with buying. That's pretty efficiently delivered. So if we were to drop below here and displace, you want to see speed, so aggressive displacement candles through this and then reaching into this inefficiency because there's just a wick through here, right? So that's not perfectly filled yet. I think I have a whole video on that. It's called how to read for value gaps and how to read inversion for value gaps. And it goes a little more in depth and shows us some examples. It should be public on the YouTube channel. I don't think, not many people talk about it. I don't think ICT has really mentioned it a whole lot, or even any other ICT traders. But I mean, if you does it for yourself, it works pretty well. And it lines up with the logic. There's nothing logically flawed with that line of thinking. Yeah, pretty weak news. I mean, it looks basically like what we got yesterday. There's like no volatility with that one. So see how this gap here just wicked into it twice. Now there's times you wouldn't expect that, right? There's going to be times where you're expecting just a wick like this with the breaker. So something like a strong PD array breaker or mitigation block. Those are going to be used like this, and we don't need to drop into discount. This is one of our entry models, right? Actually, in this case, we did drop into discount. But you don't need to drop into discount when there's your breaker. But see how this value gap now wicked through? You can assume that we'd like to leave this unfilled. We could come and run out the stops one last time, but I find it unlikely. You have this order block here with the fair value gap, so well, we can see this being used too. But there's sometimes you want to see it completely filled, especially when it's about to reverse. Like, see how it's taking stops now. That's why you also can't trail stops too tightly. Yeah, that 830 for value gap could be used as inversion. You want to extend that all the way out. I wouldn't worry too much about it, but yeah, technically you can. And you can even this gap, right? Whole bunch of selling. Now there's buying all the way through. %1 of eval, nice. Quick 20 points in and out. Cooking it up this week. Is it valid to hold to that higher time frame for value gap? I mean, if you haven't taken partials yet, if you enter down here on this breaker, I would say at least take something off. But yeah, that wouldn't be a bad idea for like 20% one runner. Personally, though, if you just had like one mini contract and that's all you could trade on demo, I'm taking it off of this buy side 100% of the time. Now we still got time in the macro, so 3 minutes left. I would say even till 10:15, 10:20. You could see the time element still be put in. You have 10:30 over here, but it doesn't need to. Yesterday we were off by 2 minutes, I think, with that high. It was placed at 10:28, 10:26, and then retraced, and then came all the way back up during lunch. Watch this 5-minute fair value gap over here too. Wicked into it multiple times. Candle buy is closing above it completely. There's your stop run we were looking for. And see how the wick came and touched into the inefficient portion here? Right, you can extend it all the way up, but more precisely down into this range. Now, next couple candles should reach up into there. That'll be the full market maker buy model. This is basically just a cleaner version of yesterday. Just the Omega setup? Now I'm curious. I'll pull up that PDF. can't find it. I was just watching this bicep be taken. I don't think we have any inefficiencies over here. Oh, we just have that wick. Also a good learning experience, right? So a deep retracement here, probably taking out some stops before the real run up. It's good to study that either for trailing stop reasons or for holding price. Trusting a move like this just to be a turtle soup, and then there's your buy side tagged. Let's take a better picture. So you can still look up for that premium balance on the hourly. Good little, what, 80 points? How far is that from the breaker entry? 108 points from there. We have from here 82, and from this gap 43. So basically your whole week with every single high quality for value gap entry. That was clean exactly at the end of the macro. Buy side is taken with -2 standard deviations. Oops. 2 is still up here, at least from where I'm pulling it, up here and up here. So yeah, if you have a runner, you could hold it for the higher time frame for value gap. I would say if you had like something like 4 contracts off or 4 contracts on, I'm taking 3 off here, even maybe 4. This is your whole, don't get too greedy, but it would still make sense for it to reach up into here. Watch for these wicks close. You'd like to see a candle body close above the buy side. Wicking it like this, sometimes we can have a retracement. Technically, the wick on the 930 tapped a 15-minute breaker and discount from the left. So 25-point stop loss if you took long there. If you were solid on your bias, would have been a nice long. Oh, I didn't even see that. There you go. That's what you want to see. I like it. Good analysis. I measured it from the bodies. Okay, I see. Oh, yeah. What the heck? Perfect. Now, I am curious if we use the time fib here. Well, you got your entry time. That's pretty good. And the 2 to 2. Let me see. Okay. All right, let me screenshot this really quickly. Put into breaker time fib. If you don't know what this is, don't worry about it. I haven't went to that Q&A post in a while. There it is. Yeah, great examples to study from this week. Yesterday, today, I think every single week or every single day this week was pretty solid. But especially today, something like trusting that these 830 news profiles all do one of 3 things when they're high probability, and just learning. Okay, if like one thing you could look for is this 930 stop run. Okay, if 830 is coming to take buy side, and then 930 takes the other side, it's most likely going to be a market maker buy model. If 830 takes buy side, 930 takes buy side again with their sweep, you have to be careful. You do probably wait for 945 just to see if there's 2 Judah swings, but you would assume that this is then a internal range stop hunt on the first stage of distribution, and we're going to continue lower into your IRL or ERL target. So that also just comes with trusting whatever ERL will be swept out or IRL will be swept out at 830 news. It's easier to see it. But we just barely missed discount. We still have to stay flexible in our bias. We can't marry the bias. So we went from premium ERL to, we missed discount here on the 5 minute. I'm sure we probably filled the 5 minute dealing range. I don't really like using the 5 minute, but 15. Oh, actually, we probably just dropped into discount on ES. We did not. Here we did. Where'd you have placed your stop had you had entered on the breaker? So in the hypothetical terms, stop would have to go probably below the 929 candle. I'm not saying that wrong. It would be this candle I would look at. So if you would enter on the breaker, you have to accommodate the entire fair value gap being filled. So you could look at either placing a stop in the 933 low, or I would use this 929 candle, because this would also be used as a bullish order block, right? So it's the change in state down here too. Or you could wait for something like this. Fair value gap, internal range stop run, fair value gap right there. 946 entry would be a clean one. Yeah, also watch this 5 minute gap too. Making sure your trades are lined up with the 5 minute order flow will help you lose less. That's why I introduced just looking for the 5 minute filter candle. But yeah, no problem. Have a nice weekend as well. I'll see you hopefully on Monday or Tuesday. But just have the 5 minute candle pulled up. So the 5 minute is really your intraday scalping like handbook. I guess the 15 and the 5. 15 and the hourly should be for draw, and the 5 minute is what a lot of quality entries will happen on. So trust the 5 minute order flow. Every higher time frame order flow is going to be prioritized over lower time frame order flow. So when you're looking at the 5 minute chart, make sure that your trades on the 1 minute or even on the 5 minute are in line with order flow. And order flow is basically just watching the order blocks and the fair value gaps and how we're filling those. So if we have something like this 930 candle running all the way above this this order block here, you can look at that now as a potential breaker. Now as we come back and tap into this last down closing candle, it's a change in state. You start trading off of that, then you can look for 1 minute fair value gap entries as well. It's all important when you're studying this 5, because you can see so much noise that's removed than if you were just looking at the 1 minute. If you have just this 1 minute chart pulled up, or if you're not cycling time frames, it's going to be a lot more difficult than if you just zoom out, because the price will always go to those higher time frame levels. The smaller time frames are just used to get in and find a whole lot of entry opportunities. Like how many entry opportunities you see here? 1, 2, 3, 4, 5, 6, 7, 8 entries before it runs to buy side that are high quality. There's probably even more. Yeah, no problem. I'm glad you can find some use out of it. See you next week. Where'd you stop be at the 946 candle? So if you were entering here, stop. I would say probably 50% of this fair value gap. So maybe at 17,699. I would say this low, but you also could have seen a stop run one last time, like we saw yesterday. There was 2 stop runs technically. Go back and look at yesterday's price action here. In the lower SPY, see how we got 1, 2, and then 3, and then it flies up. So to accommodate for a potential second stop run, so we got 1 here, in case you wanted to drop down one last time, I would say maybe consequent encroachment of this gap. If you wanted to type stop, then nothing less than the 942. I don't think you could jam it here or here. Slowly starting to reach up. We still got 1030 as the time element. but we don't need to follow it. You can see the beautiful elements of time here, right? 8:30 to 9 putting in the high, 9:30 to 10 putting in the low, and 9:30 to 10 putting in the low, 10:30 to 11 o'clock hopefully putting in the high. Could be. Could also be a deep retracement. We have this for value gap and discount right now. Right in here. With this larger order block. Don't look at this as the order block, look at this range. I mean, these last 2 weeks in price action have been unreasonably clean, I think. So you gotta take advantage of when it's like this, because you get to August, it's gonna be rough, even late July. So we got good couple months here. End of April, May should be good. June should be solid. Early July, late July, and then as soon as we hit August, it gets a little bit more rough. Then September, October should be fine. Early November is fine. Then you get into more rough months as we approach end of the year. I mean, think about like the yearly power of 3. Open, you're gonna have some manipulation. You want to be capturing majority of the candle body. So time based would be in here. So this is the order block I'm watching. This entire down closing range. This is technically a breaker. Low, high, lower, low. That ran liquidity or value gap there. Anyways, you get the idea. Looking at 10:30 to 11 to run into this for value gap, and anything past that is extra. But we already got the market maker buy model. Look to see how this order block is held. We'll do the good old end stream technique so it reaches into buy side. But all jokes aside, solid week. Hopefully you're able to learn something, capture some of the moves. Maybe if you were demo trading, I know it's pretty optimal settings for with the news profile and all the clean market maker models we got this week. Hopefully also able to learn that this way of reading price with multiple time frames and the news drivers and understanding time is extremely important, and it clears up, I think, a lot of noise that you get from just there's so much information out there. You got to filter it. So even if you're filtering mine, like I may talk about free value gaps or order blocks a way that you don't resonate with it as clearly as you do with someone else. So when you get to a point where, I mean, even if you're in the stream, I feel like you feel confident in your ability to understand certain aspects of ICT concepts and you want to grow. Now, either in this point or at some time in the future, there's going to be other people, either me or other people that you stop listening to because the way that I approach the market or the way that other people approach the market is not going to be the way that you do. And everyone's going to be different. So don't think that someone's model is better than another. There's going to be times where it works and times where it doesn't work. So figure out what works for you. And that's why writing down a model and figuring out what you want to do with all the information that's given here, like in this 1.5 hour span, 2 hour span, is crucial. So backtesting, not even backtesting, taking screenshots of old data every day. So if you didn't do it this week, I would say if you have time later today or if you have time tomorrow, take a screenshot of every single day, the hourly, 15, 5, and the 1. And if you want to know the way that I do it, it's posted, I think, in notes and PDFs. Or there's probably another one in Q&A somewhere. Anyways, I'll link it. And then when you go back into price, if you have time on Saturday, you go back, okay, what's the week setups? What's like, where were the entry times? How can I frame a model around those quality entries? So maybe you're like, okay, this 942 entry, I want to get in right there. So what are the elements that led up to this 942 entry? Well, you had a stop run at 930. You had a breaker. So maybe you just prefer trading breakers. You have a trade into discount here. You have a fair value gap. You have the 5-minute candle printing bullishly. You have a whole bunch of stuff that you can filter out to get these high quality trade setups. And you may only find this one once a week. But I mean, who says that, 108 points is not, that's 2 weeks worth of trading, 50-point targets per week. But I mean, if you want to skip that stuff, just use the ATM model. That's basically used on the same framework, multi-time frame analysis. Very similar to, I feel like, a lot of the ERL, IRL models that are out there now. But anyways, starting to consolidate. You could see one last stop run below here, but we're holding this order block very well. Tapped it. All the candle bodies closing bullishly. If DL isn't hit by 1030, it's likely to reverse. I would assume so. Like, we don't have to see it here. I would like to see that high taken and runs into the higher time frame for value gap. But this 1010, remember I told you the take profit normally happens between 1010 and 1020 on an 8:30 news day. So 1017 putting in the high. It looks still bullish. Like, we're holding this buy side pretty well in the order block. So for back testing, we may either do it today or tomorrow. I need to figure out what time I'm free. But as soon as I figure it out, I'll send a poll out into the polls chat. Make sure to vote on that. It'll either be today, Saturday, or Sunday, and it'll be recorded as well. If you're holding runners, make sure to trail your stop effectively. I would say consequent encroachment, mean threshold of this entire order block range is probably pretty solid. So right around 17,794. Maybe even above this breakaway gap at 804. But anything less than that, I think it's maybe a little bit too far. Yeah, still chilling. Oh yeah, we still have room to run here too. That looks good. Definitely should take out that high. But we'll go ahead and wrap the stream up there. If you got any questions, feel free to shoot me a DM, or you can put it up in the Trading Hall chat. Make sure to vote on the poll as soon as that's out. Have a great rest of your weekend. Enjoy the time off from the charts. Enjoy time with family. Get outside if you can, if it's warm. And I will see you guys, Lord willing, on Monday or Tuesday. Peace. We'll let it play out here till 10:30, 10:35. Just want to see it runs up there. dropping discount. So we'll wrap it up there. See you.